Hello, future investors, and welcome back to another weekly episode. Today, we are back with another Sunday special. Here today, I have once again got the fantastic The Stack Collector. And today, we're going to be having a very interesting discussion, all things related to investing, precious metals, how to save money, numismatic coins, and everything else finance related. So, yes, welcome the Stack Collector. How are you doing, mate?
I'm very good, thank you very much, buddy. How are you this week?
Yeah, very well, mate. Thank you. I'm super excited to be here for another Sunday special. It feels great, and I'm really enjoying this. I think the last one we did went down very well. I mean, how do you think it went?
Oh, I think it was awesome. I had a lot of fun, and I'm very excited and looking forward to doing more going forward.
Yeah, same here, mate. Same here. So, I want to start off today by talking about the most popular topic between really both of our channels and the current price with gold and silver. I mean, I did have a brief look before I came on to the discussion with you today, and I could see that the current gold price for an ounce of gold was sitting at around £1,575, and the current silver price for an ounce of silver was sitting at £18.78. Now, both of those prices individually are for spot prices, but I mean, that's kind of sat around that price, in my opinion, for a little while now. Do you think that silver is going to continue to sit around those silver and gold is going to sit around those prices, or do you think in the next sort of 6 months to a year that there's going to be big changes?
Well, I did say a couple of weeks ago actually that I did predict that the price of silver could fall back down to around £19, and as you say, it's currently I think I've got it as 18.89 at the moment. So as you say, uh, it's very close to £19 at the moment, which at the moment I personally think that's really where the spot price of silver should be. Obviously, in a year, 2 years time, I do see it going up. I see there's going to be a gradual rise to both the price of gold and silver. Right now, I think that's a very good hold price if you know if people are looking at it as an investment. I think that's pretty much where it's supposed to be. I don't think it's high, I don't think it's low. So it's definitely worth. I don't think it's a dip, if you know what I mean. But yeah, if you were to ask me, I think silver's it's kind of steadied out a bit from what we've seen over the last few couple of months or weeks, where it's been quite volatile really, and going well above £20 an ounce at sometimes.
Yeah, I agree with you there, to be honest, mate. I mean, it has been quite volatile in the previous few months. Gold as well, going back probably even a year or so. You know, when I was buying actually quite a lot of gold, some of it you can see here. Back then, I was watching the prices a lot more because I was really thinking, should I buy a 1 ounce right now or should I wait? In the end, I decided to go with the plan that I like to sort of buy with my precious metals of don't time the market, just get in the market and spend time in the market. So, yeah, it was volatile going back a bit. I think it's kind of settled a little bit now. I know there is, like in the UK, talks of a possible recession coming. I'm not scaremongering. I just, from what I saw on the financial news today, I believe they've just raised the interest rates again for properties. So that makes it not particularly a good time for property people, maybe buying your first house, or maybe your mortgage is coming up for renewal at the end of your current mortgage term. Which the reason that isn't great is because maybe you've got a mortgage interest rate of 2.7% right now, which is sort of, not fantastic, but compared to what the interest rates have been, it's not horrific. But I believe they have just gone up, I think. So if you're really coming to a renewal point where you have to renew a new mortgage and take on the current interest rate, it's not a good time because it's going to mean your mortgage repayments are going up a lot more, and people are already feeling the pinch. I mean, you've got high energy bills, food costs are still rising. I've been watching the news on that and the financial news quite closely, and it doesn't seem that food prices are going down. So I think people are definitely going to be feeling the pinch soon. So will that have an effect on gold and silver? I don't really think it will have an effect too much on silver, because silver's not really the asset that people go to protect themselves when there's that sort of turmoil. Silver's more of an investment precious metal, in my opinion, but I think it could affect gold, especially if a recession kicks in, because people who are aware about protecting their wealth with precious metals, I think it could affect gold prices. But yeah, I mean, what's your current opinion on sort of the interest rates and the cost of living crisis, as they call it? I mean, it affects everyone differently. Everyone's financial circumstances and outgoings are different. But what's your thoughts on that sort of broad topic?
Well, yeah, no, I agree with a lot of what you've just said there, mate. To be honest with you, turbulent times, as one would say. But
Mm.
yeah, no, yeah, it's a difficult one to predict because you would expect by now that the inflation rate would start to level out. I mean, um, obviously, from 2020 onwards for a few years, things went a little bit crazy, and it's going to take a while for things to settle down fully after that. Going back to what you said about the price of gold, I definitely think a recession would affect the price of gold. Now, there's a couple of things I could see that leading to. Like one thing you say and suggest is that people would go to look to secure their wealth in gold. But
Mm.
on the other hand, during a recession, people are going to have less money. So I think there's going to be less people able to invest in gold at that point. As we know, gold is getting very high, the price of gold at the moment. So during a recession, it's when people look to invest less than more, which is it is where people get it wrong a lot, as you'll see in a lot of you'll hear a lot of people saying that buy the dip. When recessions happen, when hard times happen, it can be a great time to make money, if you invest in the right place at the right time. So yeah, it's something that, as you say, it affects everybody. It affects everybody different. Um, I don't think it's gonna. I don't think everything's gonna get sorted out in the next 6 months to 12 months. I think we're still going to be seeing quite a bit of volatility, at least for the next couple of years. What happens globally can have a huge effect of that. Now, the Russia-Ukrainian war, that does have a big impact on a lot of things. If energy prices go up, pretty much everything goes up because everybody needs to pay it for electricity and gas. No, it doesn't matter what they're producing; they're using some form of energy consumption. So if you see energy prices going up, which we have done due to that, you'll see inflation rates rise across the board because everybody will have to put their rates up on prices up just to recoup the losses that they're seeing through spikes in energy rates. So yeah, it's very interesting, a very very interesting times, and hopefully things can steady out a little bit globally. And I think we're going to have to see that happen first until we can see any kind of further security in the markets in general, or in precious metals. I think while you've still got things like that happening, you are still going to see at least a certain amount of volatility in the market, and we are going to have to wait for those to resolve themselves until we can see more of a more of a steady usual market, as it were.
Yeah, yeah, I completely agree with you there, mate. And I mean, just touching on something you said there, referencing the Russia and Ukrainian war, that's of course had a detrimental effect to the global economy, and especially precious metals. We saw gold prices rise, especially when Russia invaded Ukraine. I believe it was in 2020, February 2020, if I'm thinking right. And I think another reason why we probably, especially in the UK, have seen a dramatic rise in that their food costs, which does affect investors, because obviously
Mhm.
anything you have to pay more of, it takes more money out of your investment pocket. And I believe that Ukraine is one of the world's largest suppliers of grain or wheat. So of course that's bread and everything like that. So I'm not surprised that effect of the Ukraine and Russian war has has had such a detrimental effect on the globe.
Mhm.
Now, having said that, it does create opportunities. You know, they say when there's a recession. I saw your comment on one of 365 Days of Silver's videos. Was just reading through the comments, and I read your comment about you say some people get scared when there's a dip in the market. Maybe, for example, you could use crypto as an example, and that's when they sell. But I saw you said something along the lines of, and correct me if I'm wrong, but I believe you said that's exactly when you like to buy. You like to buy the dip because you're in it for the long term, and you see that as a optimistic mind. As an investor, you analyze, you don't criticize, you look at the positive, and you see that dip and you go, now I'm buying more, because it's just
Yeah.
literally saying, hey, I'm cheaper now, would you like some more? Because you're in it for the long term, you're seeing this as a long-term investment, so you're not worried that it's cheap because you're looking beyond the end of your nose. And yeah, I think that's a good way to look at investing. So they do say, with these economic crisis situations and recessions, a real good savvy investor doesn't get panicked by dips. They buy the dip. And there's a saying, isn't there, that you only lose when you sell. So maybe your holding does drop below average, maybe it is even in the minus. You have to remember that you haven't lost anything until you sell it. So you have to ride that storm, and I think that's what makes a a wise and cool-headed investor, because I think with investing you have to try and keep emotions out of it. But yeah, I mean, referencing your comment, was that an accurate sort of description of what you were trying to get across in 365 days video when you left that comment?
Yeah, no, absolutely. I remember the comment you're referring to very well. And it's 100% too. I think what I actually said was I get excited when I see, or I look to buy when I see the drop, but I also get very annoyed if I don't have any cash laying around when I see a dip. It actually gets really annoying to me. That's the only time I get annoyed at a dip, if I don't have any spare cash to actually invest in it in that time, because I do see dips as a huge opportunity to make money. Going back to what you said earlier, recessions, although they can be very scary, they are a huge opportunity to make money. When prices drop, that's when you want to really buy in, and it's like you say, you can't time the market, but you can react to things that are happening in front of your face. So if you see a sudden drop in a share price or a an asset price, whatever it is, then you can react to that, absolutely, and benefit from that. And also, if you see a huge spike in the price, that and it is a spike, and that that's not going to stay for long and it'll come back down a little bit, that's a great price to sell, because even if you just sell and then buy back when it comes back down, you've made a little bit of profit off your money. So yeah, I do really like to see dips happen every now and again, because that's when you really want to really look into invest high. And that's what you want to, that's the mindset you want to have as an investor. If you are in an asset that you do believe has legs and has staying power and isn't going to go anywhere, you really do want to hope for the odd dip here and there, because that's when you can really buy it cheap, wait a little bit of time and see it, and see that price go up. Once you've been invested in an asset for quite some period of time, you become used to where the average is, or where the baseline is, and where roughly the normal price for that asset is. Now again, what you can't predict is anything that's going to happen externally that could massively affect that price one way or the other. But something like the S&P 500, you can get a good idea of where what is a good price and what is high, if you know what I mean. So yeah, no, absolutely, you got it 100% right. Don't see falls in prices necessarily as a bad thing, because if it's long-term investment, you should be in it for 10-20 years or more. So what you're buying now if you're in a good asset, you should have profit on it no matter what, no matter if you're buying at a high or a low. It just means you're making a bit more on the lows than you would the high. But even when you're buying at a high, given enough time in a good asset, you will still make profit on that because it will still go above that high. So it's one of those things where it's, as you very rightly say yourself, time in the market very much beats timing the market. But I think ideally the best place to be is a bit of both, to have time in the market, but then also react to the market when you see these big changes happen, which don't happen every day, which is why you want to be able to really take advantage of dips. And that's again why I can get quite annoyed when I don't have any spare cash available to actually take advantage of them.
Yeah, wow. I was literally, if the camera could have seen me then, I was nodding my head in complete agreement with literally everything you said. You spoke like an absolutely true and seasoned investor there, mate. Yeah. I mean, I would love to touch on the fact that you said you can't really time the market, but you can react to the market, and I thought that was such a good explanation. I always say don't time the market, just get in and spend time in the market. But you've just proven a extremely valuable point as a clearly experienced investor, that yes, it's not particularly great to try and time the market because you can often lose out. However, you can react to the market, and that is a very, very great explanation how to differentiate the two between timing and reacting, because timing is completely different to reacting. Timing, you're waiting, you're losing out, maybe you're getting a good opportunity, but reacting, it's instant, it's quick. And like you said as well, once you become a seasoned investor in a particular investment, maybe precious metals, you get to know the current baseline of the spot price for that item. So you will realise that, okay, I know averagely for an ounce of gold, it normally sits between £1,600 an ounce. So when you're aware of that, you don't need to do more research, because you can literally look at the price of something and go, well, I know that's not normal because I know the average is this, so buy. And that explanation you said of reacting is so good, and I'm going to try and remember to use that going forward, because it's such a great explanation that can really help maybe a new person who's new to investing, because you've got to keep the emotions out of it, but instead of timing it, you can react to it. So yeah, really, really great information there, mate. And obviously you touched on about being an investor for a long-term period, and I know we've spoken about your investment in the S&P 500 before, and you've actually held it a lot longer than me. I've only actually held the S&P 500 as an investment for about a month now. But I did have a look before I came on to chat with you today, and the current percentage it's up by was saying it's up in a plus yield essentially of 4.47%. And as an investor who's only held that for a month, I'm really pleased with that sort of yield as a percentage. To have 4.47% up on my investment from a month ago, I'm really, really happy with that. But of course, the S&P 500 is a long-term investment. That's common knowledge. But yeah, I mean, what's your thoughts on the S&P 500 with the price, with the percentage looking good, and how do you see that forecasting in the future? I mean, you've held it a lot longer than me, so maybe you can maybe you've got some better thoughts on that than I have.
Yeah, no, I think the S&P 500 is brilliant. I mean, it's definitely not a get rich quick asset. It's a it's a long term investment, and it's what if you go and I'll go back to when I very first started investing. When I first started to think, what am I doing with my money? With it, why am I wasting it all? I should be investing in it. I should be making my money. Money makes money, and I should be making my money make money for me. So I went out and did all the research, looked into it, and one of the main people I followed right at the beginning was Warren Buffett. The guy is amazing. He's if anybody doesn't know who Warren Buffett is pretty much the number one investor on the planet.
Mm-hmm.
And I was watching a lot of his videos, and one thing he was saying is, if you're new to investing, just dollar cost average in the S&P 500. That's all you have to do. It's beating inflation, time after time after time. If you held for a certain amount of time, there's never been a point in history that you could have lost money. So that's what got me into the S&P 500 straight away. And it wasn't just Warren Buffett. It was all the greats, Peter Lynch, Charlie Munger, and everybody else as well was saying, how good the S&P 500 was as an investment. So that has been my very first investment, and it's something that, as I say, it's something I intend to invest in on for pretty much my whole life until retirement, and that's what I hope to then look to cash in and take the benefits of that. But I think it's an amazing asset which I would highly recommend to anybody who's new to investing. Maybe you're a little bit wary. Maybe what's stopping you investing is you've heard of the stock market and it makes you terrified, because what you do is when you hear of the stock market, you associate that with day trading, which is a very terrifying territory to be in, and something I don't advise people to get into at all. But when it comes to long-term investment, it can be so risk free. It's something that I recommend that everybody should really be doing, and it's the one that I chose for myself, so it's got to be the asset that I would recommend to any new investors that are really getting into, just want to get into investments. It is a brilliant asset if you're looking to stocks and shares. Now, of course, I'm not going to deny that my very favourite asset is the shiny stuff, gold and silver. That's my favourite asset. It's a great asset. But the thing is, there's so many good assets out there, and there's not one that's right for maybe everybody. And there's certainly a multitude of assets that people can make money off of by investing. And what's more important to me is the principles of investing rather than the vehicle that you're invested into. As long as you're checking off all the principles and everything's as it should be. It's Don't limit yourself necessarily to one because that's what somebody else does. Look into what's right for you, and there are a lot of ways to make money through good investments.
Yeah, very well said, mate. I mean, I love the fact that you touched on some of those, the world's best investors. Warren Buffett he's got to be the number one, at least number one in terms of most known. And I actually the sort of comments you spoke about that he had said, I recall seeing them somewhere, and touching on what you said earlier about you don't like it when there's a great opportunity and maybe you don't have the capital to invest. Warren Buffett, I remember him saying that it's always good to make sure you've got capital to seize an opportunity. And I mean, he has got a fantastic record. Well, like you said with the S&P 500, I mean, it is such wise advice. It is such a good investment. I mean, the S&P 500 is for me, it's a newfound love as an investor. I seriously do enjoy investing. I find it addictive. I find it a hobby, and the S&P 500 being made aware about this fantastic investment, to break it down, it's a long-term, low-risk, hands-off investment for investors who don't want to be individually buying stocks and potentially making risks by buying stocks that they're not really sure that they're confident in the knowledge of that business. It's a long-term investment with a very, very low risk record. Of course, it's not risk-free. No investment is, but of course there is ways to determine low risk versus high risk, and the S&P 500 is a very low risk. And I just love that it's easy, and you can put in a automated amount a month. It tells you what your forecasted prediction is on the current annual yield. And I mean, that makes it so easy for a new and seasoned investor. And like you said, for early retirement, it is a massive string to your bow. I mean, funnily enough, I had my pension documents come through today for my actual work, and I was reading through some of those documents, and I was thinking, okay, this is actually not a bad pension for the company I work for, but boy, am I glad I've got the S&P 500, and I'm glad with the amount I'm putting in, because I don't just want to rely on that pension, because it's not going to be anything great compared to my S&P 500. And it makes me happy that I'm making an investment for my future, and the end goal is to retire early. I'm 26 now. I would like to retire at a very ambitious 20 years from now, at 46, worst case 50. That's my goal. Very ambitious, but life's all about making big crazy decisions, isn't it? So I'm glad I've got the S&P 500. And actually, you might know about this chap, but there's a chap called Martin Lewis. He's basically he's British, and he's a phenomenal financial expert. He founded the website moneysupermarket.com, and he ended up selling that for like £100 million or something crazy. But he still features a lot on TV, radio, podcasts. And funny enough, I saw a quote that he did. He was in a podcast, and he said, he was talking to the radio host, and they were talking about, the radio host was saying, look, I've got no pension. I've never had a pension. And Martin Lewis said, well, I don't recommend that. That's not good. And he said basically, some of the benefits to having a pension is it's a tax release. By the more you put into the pension, the less tax you pay. I know you pay tax when you sometimes get your pension, but there is so many benefits to having a pension. And he gave some pretty scary statistics. He said that there's a good way to work out what percentage you should be paying into your pension, say your work pension, maybe your private pension. And he said, whatever age you are now, half it. And that percentage will give you a percentage of what should give you a good retirement amount. So, for example, I'm 26 years old, soon to be 27, unfortunately. But let's say 26. So half of my age, that would be 13%. So from the point of my age now, I would need to invest 13% of my salary into my pension to have a good retirement pension. Now, the point he was making by that is the better you start investing, the earlier you start investing, especially into your pension, the better off you are. Because if you're 50, for example, you then need to put 25% into your pension if you start investing then to have enough to retire when it comes to retirement. And of course, no one can afford to do 25%. So the earlier you can start investing and the earlier you can start putting into your pension, the better. It's never too late, but of course it's harder the older you get. So the S&P 500, I think, is a fantastic investment, and I'm pleased I found it at this age. I do wish I found it at an earlier age, because I might already have a larger amount of money in there. But hey, it's better to have it now than not have it at all. And going back to Warren Buffett just quickly, he gives some fantastic quotes, and I don't think this one particularly... this quote came from Robert Kiyosaki from the book Rich Dad, Poor Dad. And he said, job, where you go to work, job is an acronym for just over broke. And moving off of pensions onto, being a worker, I think the goal for any investor, or not really any investor, maybe that's wrong, but the goal for any ambitious investor who maybe wants to become an entrepreneur, who wants to work for themselves, they want to get out of that rat race. And when you look at what a job is, the acronym for job actually means just over broke. So you work just so you're not over broke. And I think that's really, really a good way to describe a job. Because most millionaires will explain to you, it's better to have your own business, like yourself, the Stack Collector. Obviously, you have your own company, and I'm sure there's stress to it, but the benefits of having your own business really can, help you on that investment progress. I'll pass it over to you, because obviously you are self-employed and run your own business, so you might be able to talk a bit more about that. But do you feel having your own business allows you to maybe invest more capital?
Yeah, 100%. One thing I learned quite some time ago is you will never get rich earning a wage. It just won't happen. You're making somebody else rich. That's what you're doing you're making them so rich that they can afford to give you money out of what you're making them. And that is literally how a job works. It's 100% right, just over broke. You, if you need to be, you need to be putting your own money up front to be making money off that in one way or other, whether it's buying materials or buying tools and equipment to set up a business or whatever it is. If you've got a job and you're working for a company and you're working for somebody else, all you're doing is lining their pockets 100% more than you're making up for yourself. It's the job industry that employers will always try to, they'll always go to the cheapest person that's good enough to do the job. So prices, wages can be stupidly low for what people are actually doing for the jobs. I was fairly successful when I was younger. I worked in the insurance industry as a claims manager for buildings and contents insurance claims. It's still, in comparison to what I can make now and the amount of time and effort I have to put in to make that money, it's absolutely insane. Now I haven't got a huge business. I make enough to be comfortable on. But it's and there are bad times. There will always be bad times with business. But when it comes to actually really trying to secure your get that financial security, the best thing you can do is to be set up for yourself in some way or another, and have more than one means of income. You'll find that a very large percent of millionaires, they have multiple sources of income, probably 5 or more, and that's just something you will see in a very, very large percent of millionaires. Because you do want to be diversified, you do want to have different means of having incomes, and I have my business, which is a tree surgery and landscape gardening business, but I also have other things that I'm invested in and all other things that I have to make money for myself. So it is very important to be out there using your own skills, your own talents for your own benefit, not for somebody else's benefit.
Yeah, very well said, mate. And it's great to hear from a successful person who has and does run their own business, because it gives a real good amount of inspiration for someone to maybe get out of that rat race and start their own business. I mean, I can't talk. I am employed, and I'm lucky enough to earn a good wage, I'd say. It's definitely not no pocket change. It's pretty decent, but it's probably not even close to what someone who runs their own business earns, because, like you say, you never get rich for working for someone else. So a couple of the points that you mentioned really stuck in my mind then, and one that you said was the multiple sources of income, and it really, really, perked my ears up, because I love that. I love the multiple sources of income. Robert Kiyosaki said the simple way the rich get rich is they build their asset column, not their expenses column. And that's all you've got to do. That if you literally follow that simple process, I truly believe that is the key to wealth. Building your asset column. Okay, what's in my asset column and what is in my liability and expenses column? You need to make that as low as possible, and you want to make your asset column as big as possible. And that then creates, like you said, multiple sources of income. And it's better to have, in my opinion, multiple sources of maybe small to medium drips of income than one large income, like maybe from an employer. Because as we know, with COVID, you're never really secure, and it's always better to diversify yourself and your investments. And as we're a finance channel, and my channel myself is actually called Future Investments, it's not just precious metals, I'm happy to talk about the figures. And I recently did do a video on why you should talk about money and why I believe it shouldn't be a taboo subject that we're all brought up with. And this month, I had the best financial month of my entire life. I've earned more this month net take-home pay than I ever have. And that is simply because of multiple sources of different income, and they've accumulated together. And I looked at the figures and I thought, bugger me, that is an achievement. That has blown away any month close to that in my life. So it does show that when you really put your head into it and invest in your own financial intelligence, it can start working for you rather than against you. And the more you do, the easier it gets. So yeah, your point there on multiple sources of income, very, very valid.
Brilliant. Yeah, thank you. Thank you very much for that. And it is very much a true point. I mean, you can never have enough sources of income, in my opinion. And just going back onto what you just said there, future, and going back to the Robert Kiyosaki, Rich Dad Poor Dad. It is like he says in that book, so important to be able to identify an asset versus a liability, and so many people do get it wrong, and so many people have things in their asset column that aren't assets, they are actually liabilities. And it is super important to be able to identify and separate the assets from the liabilities, and just minimize the amount of liabilities you have in your life completely. Now, once I got that mindset, for me, I really changed my lifestyle massively. I stopped wasting money. I stopped going out and buying new clothes that I didn't need, or just going out and spending money just because I had it in my wallet. I was more looking to see how can I possibly use this money to make more money going forward. There's still things that I have planned that I intend to do. Like there's other businesses that I'm intending to, hopefully, if the timing's right, I'll be able to get them started this summer. Now, there's some seasonal businesses I'm looking to getting set up, and as you say, you should feel like you can talk about these things. I'm looking into setting up a little bit of events business, where I'm hopefully, fingers crossed, going to be having my own mobile bar, and just basically other things that you hire out to venues such as weddings and parties, bar mitzvahs, that kind of thing. So that's something that I'm looking to get into, hopefully again this summer. It's something that I would be very interested in, and it's something that I think wouldn't be too difficult to set up. There's some legalities to it, the licenses, laws, that kind of thing, but it's something that I think I'd really enjoy doing, and that's something that I plan to do in the future. So going back to comments, there's something I left this comment on somebody else's channel this week, and it's something I like to say because I just think it's so important that it's important to be fluid, to be constantly moving, to be constantly changing. Don't get stuck in a rut. Don't think you've got the best investment in, and that's it, just put all your money on that. You've always got to be looking at other things and other potentials and other ways that there are to make money, and what assets there are around you. Most opportunities, they don't come knocking at your door. You've got to be out, you've got to be doing groundwork yourself, look at making phone calls, trying things, and don't be afraid to fail either. Another statistic is the amount of millionaires that have gone bankrupt in their time. They've had to declare bankrupt or become a millionaire, then gone bankrupt and become a millionaire again. There's a huge amount of people who've done that, and it's because they've never lost that mindset. They've been able to get them to be a millionaire once. Something's gone wrong. They've started again and been able to do it again. And it just goes to show that once you do get that mindset, it opens doors and opportunities to you. But as I say, you do have to get out there and do a lot of work yourself just to get as many opportunities as you can do.
Yeah, mate. I mean, once again, I was absolutely nodding in agreement with you. I mean, the, it's like you're reading my mind, and I mean, even more so, you're coming out with information that is just showing how much of a seasoned investor you are, and I'm almost like writing these mental notes down in my mind, even though some of them I already self-consciously am aware of. It's just so refreshing to hear someone who's been there, who's doing it, give this fantastic advice. And I love the fact that you were willing to share your potential new business idea, because like you said, it maybe is a bit better to talk about finances and try and lose that stigma, and maybe that includes talking about your investment ideas. And I've touched on it before in many different episodes of mine, that I think you should network. If you want to become financially successful, you should try and network with like-minded people, and a prime example of that is I've always been good at saving, okay, but I was never particularly good at investing because I just didn't have the knowledge. But creating this YouTube channel was the single best thing I've ever done for my own investment portfolio. Not only has it helped me increase my precious metals portfolio, but I have learnt so much and I have networked so much. You know, it's brought me to yourself, the Stat Collector, fantastic other YouTube channels like McDonald Bullion, the Silver Stacker, 365 Days of Silver, and all of the fantastic viewers. And I believe networking and mindset is so important when it comes to investing. Like you said, there's so many people that became millionaires, lost it, and then regain their wealth because they have that winning mindset. And it's such a valuable thing. And I think if you've got that, you can't lose. And you talking about the fact that you know willing to be open and say, look, I am considering this next business or a potential extra business. I love that. And by you doing that, you are yourself networking, and maybe someone who's listening could go, here's an idea towards that. So then you've actually rewarded yourself by being open and by networking because someone's given you feedback that's actually beneficial to your new business idea. And I think that's how networking works. And I believe that is such a fundamentally strong and beneficial thing to do when trying to be financially literate and better your financial future. So yeah, great effort there, mate, on volunteering that information. I absolutely love that. Yeah, really helpful to anyone that wants to start a business as well.
Yeah, I just wanted to bring something up because this is. I was watching your recent video about networking, etc. Like you're just talking about, and one thing I did that came to my mind I wanted to discuss with you today is it's not that you're wrong in any sense at all, but again it goes back to the Robert Kiyosaki liabilities versus assets. You know, you've got to be able to you've got to know how to identify that in people. Some people are assets, some people are liabilities. Some people
Yes.
you want to network with, the assets. The others, the liabilities. They're the people you don't want to talk about money to. You don't want to let them know how much money you've got because they're the ones that come with a handout and it's like, oh, this has happened. Is there any chance I can just borrow this and I'll pay you back next week? And then next week something else has happened, and etc. etc. And they're liabilities. So you need to. It's very important to be able to understand. How to identify that, how to identify who is an asset to you, who is the kind of person you want to network with. Like you say, YouTube's amazing for that, and not even just for content creators, but just for being. If you're a viewer and you're in the comment section now, I mean, you'll know him. 365 will know him, and a lot of content creators will know a guy named Lee Parola because he's in all the comment sections commenting on everybody's video. So, you know, he's networking, he's doing that. You know, he might not even be realizing that's what he's doing, but he's doing it. He's out there talking to the right kind of people who are into the right kind of mindset. So yeah, no, I absolutely agree with everything you've said right there, mate. It's you know, I just like what you've said yourself. You could see me, I'm nodding along as well. But I think that in itself shows that there's, when it comes to investment, there is some things that are definitely right and wrong. You know, there is certain things that are just true. And they're the things that you'll probably hear people talk about, and you'll think to yourself, "Oh no, but yeah, I agree with that you know, I can relate to that." And it's truly because, you know, this the advice that a lot of people give, the advice that you're giving today that I'm trying to offer myself, you know, it is fact. It's not opinion. You know, people aren't making these figures up. People aren't, you know, just pulling it out of thin air. This is how people have gotten rich. I once heard Warren Buffett say, "There's just 7 things you've got to do to get rich." But the problem is people can't do it. And the main thing about it is people can't stop themselves selling when it's red. They panic. They see it go down and be like, "Oh no, I don't lose everything if we sell in the red." You know, and that's one of the, and I know we've discussed it previously, but it really is one of the biggest and main mistakes anyone can ever do in any type of investment. There's the number one golden rule to invest in my opinion, is sell green, buy red. You know, buy low, sell high. Don't ever buy when it's green, unless if you dollar cost averaging, then obviously, and there's things like the S&P 500, which I have, which I'm dollar cost averaging, which, it's a standing order every month. It goes out at the same time every month into that account. That's something very different. But, when you're looking to close, you don't ever want to look at it and say, oh, it's red, so I'm gonna sell now. You would hold on to that investment for a bit longer until it came back. So I think that's something that's very important to remember as well going forward.
Yeah, again, mate, the life lessons and information you've been coming out with today have been absolutely phenomenal. Nothing shorter than usual, but it's just hitting the spots on accuracy of what you're saying. I feel like if someone's watching this episode and they've got this far, not only thank you, but I mean, how amazing you have received all of this information, from myself, but from today, yourself, the Stat Collector, you have just thrown bucket loads. You might as well have just filled up a bucket of gold and gone, there you go, have some of that information, because you need to write some of this down if you're watching this, because it is such valuable free information. And you talking about Lee Parola, I mean, yeah, what an absolute legend. He comments on all of our videos throughout the community, and he himself says, maybe he's not particularly into investing, but he loves the videos, and like you said, he's probably subconsciously taking in this information, and just his support is amazing, and it doesn't go unnoticed. And on the topic of Lee and our viewers, I think a nice way to finish today's episode off would be to maybe touch on a couple of questions, or talk about some of our viewers, or anything like that, because I feel like we could bring it to a close by bringing the content home to our loyal subscribers, to the viewers who have and always watch till the end of the videos. And yeah, I mean, if there's anything you would like to say or talk about for them, go for it, because I feel like it's a nice way to bring it back to the tight-knit community who support us all the way through.
Yeah, no, I absolutely 100% agree with that. It's, I mean, I'm constantly looking for ways that I could give back to the amazing community that's out there. It's, the support you get, it's just phenomenal and incredible. And I don't think people realize just how much, people like yourself and I mean it when we say how much your support means to us. It really is insane. And there's, we've mentioned Lee, but it's not just Lee. I know for myself there's so many people that I'd love to mention. Jamie Frost, he's sent me a few things, just absolutely incredibly generously of him, and he's been there supporting the channel from the beginning. Every Cloud, he's been there pretty much from the beginning. And the problem is, when you start, you get so scared that you're going to miss somebody off, and I know that I am missing people off that I want to list, but when you're here on the spot, you're always going to forget somebody. So I just want to say thank you to everybody. It really does help us small, especially for myself as a smaller content creator with a much smaller channel. Just having the few regular comments and getting to know people, and actually getting to get this. There's a few people in my subscriber account that I genuinely consider as my friends now, and I think you probably know who you are if you're on that list of people. But I do see you as friends, and it's such a pleasure and an honour to have you in my life. So thank you once again to everybody.
Yeah, well said, mate. I second that. This community is like nothing I've ever found with YouTube. It's utterly amazing, and just like you said, the support that you guys give. I mean, like you said, it's impossible to name everyone off the spot as well. But for myself, Every Cloud, George Videos, Lee 365, McDonald Bullion, the Silver Stackle, Constitutional Silver. All you guys. It's when we say, and myself, and we say really appreciate your support, I do mean it, and I know the Stat Collector does, because we know that you guys work and you have lives and you've got kids or a girlfriend or pets that are, taking your time. So the any time that you come on and watch our videos, we really do appreciate it. And I think for a thank you, I might do a 5,000 subscriber giveaway. I think that would be a nice way to give back to you guys. I've been thinking about it recently, so I want to announce it on here. Let me know if you want that 5,000 subscriber giveaway. Not only will it help me get to that 5,000 subscriber sort of achievement, I think maybe I might do a real big chunky giveaway, something to really pay back. So let me know. Let me know if you guys want me to do it. Maybe you want me to do one massive piece to give away, or maybe you want me to do smaller pieces so more people can win. But let me know in the comment section below. But from me, Future Investments, thank you ever so much for watching. As always, I thoroughly appreciate your support. It's been an absolute pleasure and a joy once again to film our Sunday series with you, The Stack Collector. I'm enjoying it so much. In fact, I'm enjoying it probably more than even when I film on my own. So I am already looking forward to next week's episode when we film again. So signing off from me, thank you very much for watching, everyone, and goodbye.
Hello everybody, Stack Collector here. I just want to say, as a little thank you to anybody who's still watching at this point of the video, we're going to give you a chance to win both of these coins right here, which is a 1963 shilling and a 1961 sixpence. All you have to do to be in a chance to win them is just go to the comments and put Stack the Future. And what we'll do is we'll select somebody at random and we'll let you know next week who's won both of these coins. So that's Stack the Future in the comments below. Brilliant. Okay, so that being the case, until next time, as always, keep stacking, take care, and goodbye.